Hi, this is Steve Bray with today's Lone Star Lending Star Bids. Mortgage rates remain range bound. Fortunately for us, the range is a pretty nice place to be. Rates are the best they've been since last summer. At some point, the range is going to break, so let's look at the factors that may influence that break. Rates hit their recent peak and started heading lower last November in response to stock market losses and concerns about the economy. The stock market has rebounded, and recent U.S. economic data looks pretty rosy, so we don't have those factors working for us anymore. Trade concerns, especially the ongoing tariff battle with China, added uncertainty to the market, which put downward pressure on rates. However, it's looking increasingly possible that China and the U.S. will resolve their trade issues and remove that as a factor. Concerns about global economic growth have been a factor for a while, and those concerns seem to be intensifying. Recent data from Europe, China, and Japan have indicated weakening economies, and Europe still has its Brexit headache. Remember that slowing economies lead to less demand for money, which leads to lower rates. But I'd say the biggest factor affecting rates right now is the Federal Reserve. It was the Fed meeting in December that put the exclamation point on the stock market swoon, and it was the Fed's reaction to the swoon at its last meeting that solidified the current rate range. More recently, the Fed has hinted it may start buying bonds again, which would put more downward pressure on rates. Despite those hints, Fed Head Powell has been clear that the Fed is keenly interested in economic data, both U.S. and global, and will respond accordingly. Most of the U.S. data released this month was polluted by the government shutdown, and it won't be until mid-March until that pollution clears, which could be the time rates finally leave the range. That's Star Bids for today. Please comment below and follow us daily on our Texas Lone Star Lending website.